Hi, it's Dwyer. It's September 4th, 2025. Money1776.com, a free site. Also, always 1776.com, a free site. Nothing I say in this video should be construed as investment advice. I want everyone watching this video to do their own due diligence. If I mention a stock, your operating assumption should be that I might be considering buying it or I might own it. Right? Trust no one, including me. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, of course, we have been tracking the market. Let me just give you my macro view on the market right now, where I think the market's headed, better yet. Right, folks? I think we're headed for an economic downturn. I don't believe housing bounces back anytime soon. I think the people who believe that if they tinker with interest rates, people are going to flood back into buying homes are kidding themselves. I believe the Buffett indicator shows you that stocks are about twice as highly valued as they should be. You need to look at historical measures. In sum, I'm bearish on the general economy, right? I believe we're having a bit of a blow off top here. Then people are going to realize that many folks they know have lost their jobs. They're going to realize that the job losses weren't because the companies were poorly run, but rather the losses are structural in nature. In other words, these are jobs replaced by AI, replaced by robotics. Understand, many of the Mag 7 are doing well right now, but have also announced layoffs, right? So we have structural changes in the economy. All of this focus on college is ignoring the fact that you're not getting a lot of value added for some majors. If you're a computer science major, for example, you're really facing an existentialist threat from artificial intelligence. But understand, I also believe that it's not a stock market, it's a market of stocks. As Jim Cramer likes to say, in a line he took from Peter Schiff, there's always a bull market out there somewhere. Some stocks are going to thrive. Folks, I believe the AI part of the economy is extremely bullish right now. I believe the building of the infrastructure to facilitate AI, which requires a lot of parallel computing and servers, is going to thrive. So later today, you have a stock that's been on fire, right? Huge market cap. They're going to release their earnings this afternoon, just in a few hours. I've been keeping an eye on this stock. I've owned the stock for a few weeks. The stock is Broadcom. The symbol is AVGO. Again, it's AVGO. And what I want people to do is to just have a macro view of some of the things happening in AI. Look at the market cap of Broadcom over the last 18 months. See how the growth has been exponential. Now, there certainly will later be consolidation in the AI space. Right now, we're finding out what's efficient. That's unclear. So understand, you have these data centers. You have NVIDIA GPUs, which are specialized semiconductors. Right there, more versatile, but also more expensive than application specific integrated circuits, which is Broadcom's bread and butter, right? They're known as ASICs, right? Again, application specific integrated circuits, right? So, because of the cost of NVIDIA GPUs. Many people are looking at ways to cut that cost, and Broadcom ASIC chips are being viewed as one alternative, right? Just understand, this is all semiconductor related, this is all data center related. But it's a huge story given the market caps of both NVIDIA and Broadcom. So, NVIDIA knocked the ball out the park. I mentioned this in an earlier video. Please track the last couple of high-risk videos I've done here online. Well, the question is whether Broadcom is going to respond in kind. Let me say another thing too. Just like in gambling, where you look at a fight and you think, okay, real world example, I think Canelo wins this fight. But Terence Crawford, the opponent, if he's on his A game and wins the fight, it would be by decision. So I'm going to hedge the play, the exposure I have on the Canelo to win side of the play, or however you've structured it, right? Canelo by stoppage or what have you. I'm going to hedge that side of the play with Crawford by decision, right? The same way you're hedging, right? Some people in football are looking at different, opportunities. They might think to themselves, well, the Bills look like they're in the weakest division. Looks like they have a real shot at winning the AFC. But then they're going to hedge it. They're going to say, but, wow, it's hard to imagine a postseason without Kansas City, which has played in the last 3 Super Bowls. They've won the last 3 AFC titles. Or Baltimore. Maybe I need to have a hedge to protect my investment in the Bills. Well, just understand, if you're into NVIDIA, right, and you believe that GPUs are the future, you believe in the entire data center concept, you need to keep an eye. In fact, you might want to consider a hedge, particularly if the news is good today, on Broadcom, right? If data centers are able to get by with ASICs and not GPUs, why wouldn't that possibly endanger that portion of NVIDIA's balance sheet? Right? If Broadcom continues to attract attention, and understand the market cap of Broadcom right now is higher than the market cap of Tesla. Right? If Broadcom continues to attract attention, if Broadcom is able to convincingly portray itself as an alternative to NVIDIA, or perhaps a supplement to NVIDIA, why aren't investors in the space? And one of the stories with the Mag 7s are the capital expenditures. Right? Why aren't those investing in data centers thinking about cutting costs by investing in Broadcom, which of course has other parts of their business? Right? So whether or not you believe in Broadcom, if you have exposure to NVIDIA, you need to consider Broadcom as a possible hedge. And when we say a hedge, that's I have a plan A, but if I'm wrong, what's the second most likeliest outcome? Right? It's like looking at a bet and saying, gee, I'm going to take fighter A, but in case fighter B shows up and fights his best fight, what's the second most likeliest outcome? Since I have money on fighter A, and I don't want to just have my plan A fail and lose it, right? Broadcom might be that plan B in reference to NVIDIA. So pay attention to the earnings. It's a big moment, right? Not every earnings report warrants attention. This one does. The market cap of Broadcom, again, the symbol is AVGO, should tell you that. Just Google market cap, Broadcom, if the figure surprises you. If you say, wow, I didn't realize Broadcom's market cap had increased this much in the last 18 months, right? With the recognition that the people buying semiconductors are sophisticated actors, repeat players, right? Not, someone off the street, but people actually investing millions of dollars, right? Folks, chips aren't inexpensive. You don't get by with one chip. You're talking about a space where, the people bidding on these chips, many of them already have their own chips in the pipeline. It takes a while to develop, right? In this lucrative ecosystem at a time, in my opinion, of a teetering economy, Broadcom is definitely worth a look. The earnings get released in a few hours. I hope you give them a look. Those are my thoughts. Let me hear yours in the comments section of this YouTube video. Thanks for stopping by.